All right, so let's get into some daily cycle stuff. So this is from Euro GBP on the 9th of May 2022. So yeah, let's just get right into it. So coming out of this, what is the first thing that we notice? Well, the first thing that we want to do is obviously mark up our liquidity zones. So we've got this, and this. So these are our liquidity zones coming out of Asia. So another thing that we notice is that Asia is building the long channel. Okay, so we need to keep that in mind as well. But we're not going to do anything yet. We're not within any specific timings. But as we had the simplicity approach earlier, I also think it's good to just for an understanding. You obviously don't trade this, but let's break this down a little bit more. Where would our build up be? Well, we had build up here as well into inducement, trade away. You guys see it's the same stuff over and over and over again. All right, so let's jump into the next bit. So coming into this, we're obviously going to use our LIT cycle. So it's London Open. What have we seen pre-London Open? We've seen this little channel here, but not just the little channel. We've also seen the large build up throughout Asia, right? We've taken this liquidity zone here, Asia high, not Asia high, previous day. Liquidity zone from the previous day. We've had build up, inducement plus vector. So if we were to just think about it at this point right here, when they see this at one point, this will just be a fully bullish candle, right? And this is going to induce a lot of FOMO and also possibly be a confluence for certain people to buy. So this right here is a very nice inducement plus vector candle combo, and it's a London Open. I think I'll show the timing in a little bit. So this is very nice. What would be nicer is if we had a clear mitigation on the left, but we don't. So, you know, you don't pull anything out of your ass or anything like that. In cases like this, you'd probably just like play it quite safe. You maybe wouldn't, especially starting off, you maybe wouldn't take a straight inducement entry right here. Maybe you wait for your break of structure into your pullback mitigation to continue lower. Perfect, sorry. So now we're looking at this. This is our London Open. So we need to think about a couple things. We need to think about the possibilities of our cycles. I appreciate that we've only gone over one cycle at the moment, and that is the daily, lit starter kit, like the ideal cycle. So let's just, put that in our minds. So ideally, what would happen? Well, this would be our inducement. We trade away from this. When do we trade away from this until when? Preferably New York trap time. And then in New York trap, we mitigate this and we give a pullback to, sort of the middle of the day for our end of day consolidation. So let's see what happens. So where should we look to take the sells to? Well, at least here, this would be considered like your intraday target, but this right here would be like your overall target. You could do this one as well, but to differentiate between picking this one versus picking this one, we'll use our timing confluence and our other confluences. Like, for example, if we have a build up inducement into this mitigation and it happens within New York trap time, then it probably makes more sense to take it out here than it would to take it out down here. So let's keep going. Exactly. So this is, like I said, your overall target, and this would be your intraday target. Okay, so now we need to look at zones where we could expect possible pullbacks, because price is not just going to continue in one direction all the time. It's going to, you know, push, pull, right? So we could expect pullbacks here or also here. Now, would we expect this to be a potential mitigation or a smart money trap? Well, I'll just give you a second to think about that. Well, this lies on what? Asia low. So it lies on a liquidity zone. So there are one or two things that that can happen. This is likely going to be an SMT or a FFS, and an FFS is just where it, you know, runs right through it. It doesn't give the reaction, and that's because this is an area where, right, so think about it like this. We've broken out of Asia high. So where are people's stop losses going to be? Well, they're going to be here, right? So we're going to want to take them out. And that's why it's very unlikely that this is going to give us a potential mitigation. So let's just keep going. There you go. You can see we got, if you remember, we said, oh yeah, this will give us a potential pullback. Then look, we pulled back, induced something to the high side. So we induced high to go low. Yeah, potentially mitigated something on the M1 and then continued. We gave our smart money trap reaction, but we know that we still have, this is just an intraday target. But if you're not confident, let's say you take this trade or you're in like here, you can obviously take it off at this point here. There's nothing wrong with that. That's still going to be your 1 to 10 or whatever. So don't think, oh, I've got to catch the entirety of the move. It's absolutely fine to take it off where you think makes sense, and you can build up your confidence to taking it down here. Or, you know, there's multiple things you could do. You could maybe partial here and close the rest here. You know, lots of different things you can do. All right. So we understand why this is a smart money trap. Perfect. So let's go next. Like we said, it lies on Asia low. We've just completed a cycle to the top side, and also look how we've had a bullish change of character. So, you know, this would be possible like M5 break of structure. So low, high. So you're also going to have people setting their limits on this, seeing that as the extreme. So you've not just got like SLs here due to breakout traders. You've also got Asia breakout traders. You've also got SLs here due to smart money. So like we said, we're also getting close to New York open timing. Obviously, it would be ideal if it was New York trap, but we have to make do with what we have. Also, look at this. What do we have here? Big channel. So we're getting close to our timing. So what can we expect? Well, we can expect inducement. What did we induce with? Vectors. Perfect. Right into mitigation zone, all within our timing. If you're not confident with this, you can wait for your internal break of structure into mitigation within here, and you take that higher. Obviously, you do have to be careful, because at the end of the day, the liquidity is going to run out, and we're going to need to likely build liquidity for the next day. So that was Euro GBP on the 27th of May, I think. Let's get another one. All right. So this is Euro JPY on the 6th of May. So first off, where is our liquidity? Well, we've obviously got liquidity at Asia high. liquidity at these equal lows, and also liquidity at this previous day low. Coming into Asia, what are we seeing? Well, we're seeing a build up as well. So ideally, where do we always start? We identify our build ups, of course. What is the next step in the process? So we've identified where our liquidity is. We've identified our build up. So what do we want? What do we want to happen first? Well, ideally, we're going to wait for our inducement. So we want to identify our inducement. We can see we're coming down. Perfect. But combined with our inducement, we don't want to guess where the inducement is going to end. So what else do we need to use? The power of timing. So in this case, it's London Open, and you can see we have absolutely crashed down. So we've absolutely crashed down. So what are these? Well, these are our vector candles. So how many people do you think, seeing this momentum, huge momentum to the downside, we broke this, you know, the breakout traders getting all excited. How many people do you think are getting excited about this and are going to be looking for sells? Pretty much everyone, right? So let's continue. Are we really all that surprised? No. So the moment we entice everyone into the sells is the moment that we immediately reverse, take out all of these people. Maybe this would have been a bit of a tricky one to enter, probably would have had to get in straight off the inducement, but that's fine. As long as we understand what's going on, the entries can always come at a later point. We don't have to, it's about understanding first and then entering second. So you never want to enter without understanding where price is going to go. You want to understand where price is going to go first, and then you look for your entry. All right, so we've taken intraday liquidity to the top side, but it's only a minor inducement. Let's zoom out to see if we have any medium inducement zones for New York trap. So obviously this is only minor because it's Asia high, whereas this would be medium because it's liquidity from the previous day as well as the previous day low. All right, so now we can see, now we can see on M15, and on M15, this makes a lot of sense because look at this. What is that? Well, that's the false reaction, building liquidity. So now we understand why when this move came down, everyone was getting excited because you've had your double top. I'll just put equal highs. You've had your equal highs, and then you've had your breakout as well. So people are starting to really, really get excited. So let's continue to look. What's our next timing? Well, it's going to be MM2. So we can see again, build up, inducement, smaller vector candles, and then we've got another liquidity build up to the downside. They're faking the equal lows. Your entry here would be quite advanced. It would have to be a mitigation of the inducement. So now we know that they're faking these equal lows. So what do we expect? Well, obviously we expect these equal lows to be taken. Okay, price continues to build. You know, if you're in here, you maybe get a bit of shaky hands, a bit scary, but that's fine. Okay, so we induced the build up low because this was our build up. Again, you can see we induced it with vector candles. Here, look at this momentum again, right here, sorry. So we've induced that low, very nice. And now we've gone higher and we've come out and we've taken this. But we also need to know that we have induced something significant on the left. That doesn't necessarily mean that we're going to reverse straight away. But when you see, if I just go back a few pages, bear with me. So here we see that they've faked the equal highs, given a reaction. Here we see that they've faked the equal highs, given a reaction, right? So they're clearly bringing people into sells. And now the entire world is seeing it as buys. So we can start to think, okay, you know, now sells might be a good time. Not necessarily right now, but what's our next timing? Our next timing is, there you go. You can see they're even faking the equal highs holding one more time. Our next timing, New York trap. So let's see exactly what happens. Well, New York trap. We come up, we induce, come back, boom. Obviously, bit of a bigger stop, so you maybe refine this to here. Your target, or this is London close, so you're not expecting a huge move, but you can see that we've still built up liquidity. So where are we expecting it to come to? Well, this would be a perfect target, you know, quick little 1 to 4, 1 to 5 for the end of the day. No one complains about that, I'm sure. But as you can see, it's just the same thing over and over and over again, right? So we have liquidity buildup. Even just if you were to just look on M5, you've got liquidity buildup, momentum inducement to the downside, timing, mitigation of the inducement, continue, and we target our next liquidity buildup. This is without even looking at like M15, and so ignore all of these, right? Then again, we push higher, we're waiting for timing. This would be MM1. So if we ignore, you know, what we know, this would be what we know about to the left. This would be MM1. You possibly take a break even on this one, or a loss if you're taking this mitigation here. Then we have MM2, and coming into MM2, we have our build up, inducement, mitigation, and then we also build up to the low side. So we can take this off once we see these vectors. And then our next timing is New York trap. As you see, New York open just sort of builds, but New York trap. So New York open builds these equal highs, fakes the reaction, New York trap comes up, takes it out, and then we're trading away. But there's no clean entries here. So what are we waiting for? Well, we're likely waiting for this mitigation. This mitigation comes, it's a bit of a big stop, which would be fine if we were targeting lower, but we're not. This is our target, right? Because we know it's end of day, London close. We're not expecting a huge move. So then we've got possible re-entries here, you know, refine it a bit, and now we can look to target here for our 1 to 5 end of day consolidation. So we're not expecting anything huge, and that's just using the M5. But when we combine in everything else and we look to the left and we go, wait a second, this has actually created equal highs on the M15. Let's go to it. This has actually created equal highs on the M15. This is likely going to be a false reaction. Then we can be like, okay, I'm putting this together. This is going to be false. Then it's fair to assume like, okay, maybe MM2 gives the real move, right? But then you see at MM2, it's just building. And you see this inducement to the downside with momentum, likely something on the entry helper too. But so you see that, and then you think, okay, it's probably best that I at least partial here, because if you don't partial, you're getting a break even. It should definitely be a break even. There is no way that something like this should turn into a loss, because you've grabbed liquidity to the downside. So you have to be very wary of an entry that you've taken, or taking another entry. Should definitely not be taking another entry. Okay, perfect. And then you see we get our final inducement after the creation of the equal highs, vector up, lovely jubbly, mitigation at MM1, get in on the re-entry, take that down. So that was Euro JPY on the 27th, I think. Oh no, that's this one. I'm not sure that was. I think it was Euro JPY on the 6th of May. I'm pretty sure. All right. Again, same process every time. Where is our liquidity for the day? So these are all the possible liquidity zones that we can see. We've obviously got some type of equal highs here with Asia and the previous day high. Obviously this one, equal lows relative, the previous New York trap low, and then obviously the previous day low. So these are all of our liquidity zones for the day, and like Asia high, Asia low. Okay, so next up, what phase are we in? Well, we're in our build-up phase. So what should we expect every time? What a surprise! We get an inducement. Look at how, and this is quite important, look at how this inducement, again, builds liquidity to the downside. I wonder what could happen from here. When was the inducement? The inducement was in London Open. It's important to consider what we induced, when we induced it, and how we induced it. So we induced the previous day high and Asia high. So Asia high would just be a minor. This would be a medium. How did we induce it? With really strong vector candles, right? How many people do you think are getting in on this breakout thinking that this is going to go to the moon, right? Hold. Of course not. So we're within London timing. We've also, they've sort of given it away a little bit. For it to be liquidity, they have to show it for a period of time. I'd say this is a pretty good way of showing it, creating the equal lows, giving them the breakout so that they buy where their stop's going to be, here, possibly Asia low, maybe even here. So, we're putting it all together, we're understanding. What's next? So now, obviously, they continue down. What do? They fake. They get the pins. Oh yeah, this is going to hold. Lots of wicks. Oh, it's holding. Maybe they're taking re-entries here. Maybe this is the first time that they're entering buys. But what do we expect from here? Of course, we expect an inducement, and we expect it to get completely smashed. Now, let's look on this. What do we have here? We've been channeling down, and now we've taken a key liquidity point. But let's be patient, and let's wait for our next significant timing, which is New York Open. So New York Open mitigates something within this. So now, what can we expect? Well, we can expect price to continue up, give a bit of a pullback. But why is it a pullback and not a reversal? Well, we have to think about, obviously you also take into your higher time frame, like where your higher time frame inducements are and stuff like this. But also look at just within the day. So Asia built the channel sideways. It also built equal highs. This inducement vectored up, took out the previous day high. So this is our medium inducement, likely our inducement that we're going to be trading away from for the day. This will likely be high of the day. This, whilst it's still a medium inducement, compare the significance of this versus this, right? This is obviously more significant. So when you're taking these buys, at least on an intraday basis, because we don't know what the higher time frame says, maybe this is like a super significant inducement. An overall higher time frame, we're going to go like this. But on the day, don't aim intraday for this, because this is likely going to be high of the day. So what you want to do is you want to let it play out. There you go, because it's very likely high of the day / main inducement for the day. And then you can see that we got our sorry, no, not that. You can see that we got channel for consolidation at the end of the day. So likely, where would you get out here? Well, once you see these vectors in New York induce something to the left, this would probably be a pretty good point to get out.